We will see how Liquidation Heatmap is used on Trading Different website. In the Liquidation Heatmap section, we have two types of charts, scalping and swing. You can switch between them and see that each chart shows the corresponding exchange with its different pairs. Just click on it and it will open. In this case, I'm on the Binance chart. I'm on the Bitcoin versus USDT chart on a 5-minute time frame. You can select and open different charts in new tabs, in this case, for scalping. There are also charts for swing trading. For scalping, we have 5-minute, 15-minute, and 1-hour time frames. These time frames are for scalping and intraday movements. For swing trading, longer and more extensive time frames are used. To understand this tutorial, we must first define what is displayed in the window. This is what we call Liquidation Heatmap. We view all the liquidity that is displayed. We call each of these areas of accumulated liquidity, separated by groups pools. And each of these colored clusters is a settlement or liquidity pool. The chart is quite familiar, as we use the TradingView library. We have all the tools and indicators to add. In addition, we have different types of tools and filters. Each tool and filter has its tooltips. We have tooltips, which are references about what each element is, with examples. Now let's mainly look at how the liquidity volume bar works. Remember, this is a heat map, which means the red and yellow areas are warmer. Warm areas have higher concentrations of liquidity, and cold areas have less liquidity. By simply moving the color bar, I can see the liquidity within the chart. This will depend on what I want to see and the level of precision I am looking for. I can focus on the biggest price moves or understand each of the smallest moves. I can also analyze the minor movements that the price makes within a range. It is important to note that the colors are automatic and change if I start to adjust the zoom. If I zoom out a bit, I can see the liquidity at higher levels. You will see that the colors change because the algorithm detects where there is greater liquidity. The algorithm adjusts the colors based on the liquidity seen in the window. The system always detects the highest liquidity within the window I am viewing. It shows the highest liquidity in red and yellow, and the rest of the areas are graduated in other colors. Colder areas indicate lower liquidity. There is another way to adjust liquidity other than just moving the color bar. A reference number for liquidity, expressed in thousands, can also be established. I can set it to only show liquidity greater than, say, $300,000. You will see how much of the liquidity disappears and only values higher than that figure are shown. In the graph, each of these lines represents a value greater than 300,000, regardless of color. A message will also appear asking you to zoom in a little more to optimize viewing. This helps the liquidation heat map load more clearly. At the top, you will see the different leverage levels, which indicate liquidation zones. If I disable all levels, we will see each one separately. I just activated only the pools that show 100x leverage liquidation lines. As you can see, very few settlement lines appear at this leverage level. Then I can reduce the volume or adjust it manually to see more details. I can show only the liquidity of the 100x leveraged ones. I can also add the 50x ones. You will see how the liquidity increases on the chart when including the 50x. I can also include leveraged ones at 25x and 10x. This is recommended. It is ideal to analyze all liquidity before trading and adapt it to my trading system. First, I get a clear picture of all available liquidity. Then, depending on what I'm going to trade, I activate the leverage level that best suits my strategy. But first, I always check all the liquidity present in the market. You will see that when I activate the 100x pools, they show me the closest pools. The liquidity zones closest to the price appear. These areas are saturated, but with lower volume, since they are very close to the price. Positions are liquidated quickly and fail to accumulate. If I move the cursor over this red liquidity line, we see the details of this area. The total amount of this liquidity is shown above. This line has 327,000 in 100x leveraged positions long. Remember, everything below the price is a long position. Anything above the price is a liquidation of short positions. In this example, the total shows 327,000, and the pool covers from 61,950 to 61,980. This gives me good precision to see exactly where the liquidity is. I can see the amount of liquidity on each of these lines, which represent small price ranges. By showing only the 50x leveraged ones, you will notice that the liquidity is moving away from the price. The lower the leverage, the further away the liquidity is from the price. The higher the leverage, the closer it is. With lower leverage, liquidity is further away from price. Being far away, the price takes longer to arrive and settle, allowing more liquidity to accumulate. For example, a 100x pool had 327,000, but if we look at a 25x pool, we are positioned in a red zone, we will see how the amount is much higher. Liquidity is 3 times higher, exceeding 1 million, which is considerable. This is because it takes longer for the price to reach and liquidate these leveraged positions. Therefore, more short positions are accumulating in this area. Having different leverages differentiated serves to adjust the strategy according to the type of operation. If I am looking for a range scalp, I use 100x and 50x leverage to catch bounces. For range breakouts, I need to know the 25x and 10x leverage levels. Notice how the price does not break out to the upside or downside. If I am looking for range breakouts, it is essential to analyze and consider the 25x and 10x leverage levels to assess whether there is sufficient liquidity in those areas. In the swing trading chart, for high time frames such as 4 hours or a day, we will see what is important. The leverage levels that matter are 25x and 10x, which is why the price remains in range. This move allows to liquidate stagnation in a general view, but if it looks to break the range, I need to see leverages at 5x and even 3x. Leverage types are the main difference between the scalping chart and the swing chart. At the top, I can also change time frames, and the system recognizes whether it is a scalping or swing chart. With just one click, I can add indicators. All indicators labeled trading different are proprietary. For example, I can add the TrenDiff indicator. I can also search for other indicators, such as Bollinger Bands, which will load automatically after clicking. I can change the theme of the chart, alternating between white or black appearance. Here I will leave it black. I can also hide or show market liquidity with the Liquidation Heatmap. I can refresh and customize the Liquidation Heatmap with different colors. Additionally, I can adjust the brightness of the liquidity pools. I can adjust the brightness if I want other indicators or trend lines to stand out. This allows any annotation in the graph to be highlighted. I like to leave them well lit. We also have the Group of Pools option, which simply adjusts the thickness of each pool line. If you notice, when you change the thickness, the display of the pools on the graph is adjusted. As the thickness increases, each of the pool lines also becomes larger. This is useful to see how much liquidity there is accumulated in thousands of dollars in a specific area. For example, a broader zone is shown here from 64,500. I read above that between 64,500 and 64,800, there are more than $15 million accumulated. This serves as a general reference to identify where the greatest liquidity is located. Another important function is the hourglass, which practically allows us to choose the time. This hourglass shows the liquidity accumulated in the last hours that I define. For example, I can set it to see liquidity for the last 48 hours. If I have a high volume filter, I can reduce it to see more detail. I can also adjust to see liquidity over the last 24 or 12 hours. This is very useful to give more importance to the most recent liquidity that has just entered the market. Let's now see how to use the liquidation heat map in a practical way. I can see a range in which the price moves and where liquidity is evident. This shows how the price is manipulated every time it leaves that range. The price breaks out of the range to liquidate both long and short positions. This is how I understand how this structure should respect each minimum without leaving the range. If the price does this, we know it is a targeted manipulation. First, this allows me to understand the manipulation. Secondly, it helps me in my analysis. If my trading system tells me to look for a long position in this area, let's watch. The first thing I can do is optimize my entry point. I wait for the price to liquidate the positions and enter after it has liquidated. This optimizes my entry when entering after the liquidation. It works on swing charts on a day and on scalping charts. It also allows me to optimize the stop loss, which should always be placed outside the liquidity zone. This allows me to optimize the stop loss, which should always be placed outside the area where most traders lose. So instead of placing my stop loss in those areas, I place it further out, where others will lose. This reduces the chances of a sharp move or deviation in price triggering my stop loss for manipulation. This way I increase the effectiveness of my trading. In addition, I can optimize my take profit. I can make partial profit takings in the different pools. I take the take profit to the area of greatest liquidity. In this way, I optimize 3 key points: my entry, my stop loss, and my take profit. Ultimately, all of this improves the efficiency of the strategy. This significantly improves my risk-reward across the entire strategy. So I trade the bounce after the price is cleared, taking advantage of the bounce from a pool. Also, I can trade with a trend. That is, if I see that there is a clear direction. If the price shows a trend, my indicators will confirm it. Tools such as Fibonacci retracements or Elliott waves can indicate a retracement. I can follow this movement and operate in favor of the liquidity pool. Here I take a short position and I can extend the take profit until the end of the liquidity zone. I can trade without waiting for a settlement in the opposite direction. So I use this information to trade in favor of the pool or looking for a bounce in the pool. Then I can turn the bounce into a position in favor of the top pool. Let's now look at an example on a scalping chart, where there is an area with high concentration of liquidity. There is a large concentration of liquidity at the top, where the price has already started to liquidate. However, there is still a good amount of liquidity higher up. Hovering over, I see that there are leverages of 100x, 50x, and also 25x. I can wait for a pullback for the price to liquidate a new 100x pool. Only 100x leveraged positions are involved here, with 128,000 on this pool line. I can optimize my entry by placing it at the back of the pool, preferably in the lower middle. The stop loss should go outside the pool, optimizing it even more. That is very important. Even if there is an area with no liquidity, by lowering the volume, I get greater precision. With liquidity of 60,000 or even dropping to 50,000, it is clearly seen. If I place my stop loss here, it makes sense to take me out as the price would go to the next pool. The stop loss should only be triggered when the next liquidity zone is reached. This is how I correctly set my stop loss. Now, if the price indicates that it is liquidating. If the price is liquidating the shorters, I follow the movement in favor of the pool. That is a very smart tip. I take partial profits in the area of highest liquidity and continue towards the top. This allows me to capture more profits where there is a high confluence of liquidity. The price has reached my target, I exit with profit, and I notice that it begins to move sideways. In addition, more liquidity is starting to form at the top. I can apply the same strategy, observing that the price has liquidated the new longs. With more liquidity at the top, I may consider entering again after that sell-off. I place my entry in the middle of the range and define that if the price goes towards the new pool, I get out. This involves using a stop loss before the pool, not outside it as before. I place it before the pool so that if the price continues to fall and it enters the pool, it makes sense for me to get out. This way, I protect the position in case the price goes towards the pool liquidity. Let's look at another example of how to position ourselves to trade a pool bounce. The price reaches the end of the pool and bounces. Assuming we don't know what will happen, we position ourselves by observing the entire liquidity zone. We place the entrance from the middle of the pool up, that is, in the safest area. We position ourselves at approximately this height to ensure that the price hits our entry. We can go to extremes, but we try to ensure that the price triggers our position. The price then breaks through the pool, triggering our short entry, and starts to bounce. From this point, we know that the stop loss must go outside the pool. We make the same adjustment, reducing liquidity if necessary to better place the stop loss. Take profit can be set to return to the range or down to the lower pool. This will depend on the length of the short we are looking for and what strategy we are combining it with. Now let's see how the liquidation heat map is applied in each strategy. This approach makes any strategy much more efficient. Let's see how it is applied on a 4-hour chart, using a combination of ADX and moving averages. Here, the ADX shows that the downward movement is beginning to lose strength. However, the price continues to drop hours later. After 2 additional 4-hour candles, the price continues in a bearish trend. The price seeks to absorb all liquidity, causing all long positions to lose. From there, a rebound begins. Despite the low strength, the price continues to rise. The price continues until the new shorters are liquidated. This way I can extend the movements and capture better positions. All trading systems can be optimized with liquidation heat map. Let's look at an example using the RSI and open interest. If we were only using the RSI, we would have looked for short positions. However, it is better to wait for the liquidity absorption to finish. At the end of the pool, we look to get into a better position. The price starts to fall sharply and the indicator shows oversold to look for long positions. However, I know that there is an area with high liquidity, so I am not getting ahead of myself. The indicator shows oversold on this candle, but I wait for the price to finish liquidating. Only after that do I look for long positions to start looking for a possible reversal. I am looking for a price reversal. Now, let's look at the charting on this ascending wedge. After liquidating the new short positions, the price continues to rise with a trend. As it deviates outside the wedge, the price liquidates the new short positions. Here, even within the wedge, new short positions are generated. To break the wedge, the price needs new liquidity, which is accumulated while remaining in range. The breakout occurs only when a sufficient amount of liquidity is reached. When the necessary liquidity is reached, the price can break out. Let's look at another example with an inverted head-shoulders pattern. Here the price needs liquidity to break the neckline of the pattern. This explains why the price lags and prevents us from falling into an initial false breakout. By using Elliott waves, we can understand each wave and its movement. Elliott waves allow us to estimate how far the price can go with great precision. They help to understand each impulse and pullback, including the correction waves within an ABC sequence. If I expect a wave 5, I can optimize it by identifying the areas with the highest concentration of liquidity. This also applies when analyzing a price pullback. In a Fibonacci retracement, after an uptrend, we expect a pullback. Normally we would wait for levels of 0.38 or 0.5, but I optimize my entry by identifying a liquidity pool. I just wait until the end of the pool to take action. We can look for an upward continuation. We can also combine this with order block strategies. On our Discord, we have a detailed, quantitative strategy on how to trade order blocks. We take advantage of each order block and combine it with liquidity pools to optimize entry, stop loss, and take profit. Finally, let's look at another strategy. An important feature and great advantage of our liquidation heat map is the advanced filter. When I turn on this filter, you'll see that it's now disabled, but I can turn it on. This allows me to highlight what I'm already seeing on the chart by applying specific parameters. For example, I can adjust the filter to brighten certain elements according to my preferences. I can set it to show me both up and down leverages at 25x, 50x, and 100x. In this case, I set it to values greater than 500, although in the graph it is at 250. That is, I ask it to illuminate only the elements that exceed that threshold. I can also set a maximum and minimum limit, adjusting the visible levels. I tell you to look within a 4% range of the price, both up and down. 4% relative to the price, both up and down. I also tell you that there must be at least 10 consecutive pool lines as a minimum. I can set those consecutive lines to have a maximum size. I can also define a gap, that is, a zone without liquidity or black zone. This gap can be set with a minimum and maximum both above and below. I will not apply a gap in this case. I will leave it as is to see a concrete example. When you activate it, you will see that the rest of the graph darkens, leaving only certain areas illuminated. From here, I can make decisions based on the highlighted data. This allows me to see every time the graph lights up a pool. I can decide if the price is going to liquidate the new shorters. If so, I can trade in favor of the pool, knowing that there is sufficient liquidity. This sets a clear goal based on a quantitative strategy. It is useful for backtesting and consolidating a trading system with clear and quantifiable rules. If an area lights up, I can decide to trade in favor of the pool. If there is enough liquidity, I can also consider a short entry. I can do this from the last pool line marked by my advanced filter. The rest of the filter is still visible and I can adjust its settings if needed. If I set the filter to greater than 100, the entire graph will light up. This allows me to see all the liquidity, but highlighting only the areas that meet my quantitative premise. There were no areas with more than 500,000 here yet, but following the lateralized price movement, it does meet that condition. With the price moving sideways, the condition is met and zones with more than 500,000 are formed. After a certain time, this helps to consolidate a specific strategy. The liquidation heat map can be adapted to any trading system. It can be integrated with Bollinger Bands or other quantitative premises you are looking for. In addition, we have developed our own quantitative strategies. We share these strategies within our Discord. We have strategies based on TrenDiff, which you can see at the bottom of each section. Includes strategies with the high-frequency chart for micro-scalping. We also have a historical chart for backtesting whatever you need. If you are a trader or have a trading community, join our Discord. There you can learn about the different ways of trading with the liquidation heat map and our strategies. In addition, we have an affiliate program to create synergy and confront the large operators that manipulate the market.